Welcome back to Galaxy Grid. As always, I'm Alex Thorne, head of firm-wide research at Galaxy, and we're joined this week by Thaddeus Pinkavich, Jianing Wu, and Zach Picorni from the Galaxy research team. We've got an exciting episode this week. On the docket for this week, Uptober. Is it still happening? Materially dented following the leverage-driven flash crash of October 10th. We'll discuss whether the bull market is still intact. We'll also get into the biggest recovery of Bitcoins in history, with the U.S. government seizing 127,000 BTC. That's 127K BTC from the Asia-based pig butchering outfit Prince Group. Is that a huge win for the Strategic Bitcoin Reserve? Or is there more to the story? From whomst did these Bitcoins actually come? We don't know, but we'll get into it. And Wall Street is stepping up its crypto offerings with some major announcements, including shifting policy in favor of crypto from some of the world's biggest wirehouses and banks. Will Bitcoin in a model portfolio fuel the next rally? We'll talk about that. And lastly, Futarchy. What is it? We've talked about this before. I've asked this question before. Futarchy is so hot right now. We'll get Zach Picorni to talk about MetaDAO's recent many successes and what they mean, why we should care, and is it the next big meta and trend in crypto? Before we get to all that, I need to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Zach, Thad, Jianing, welcome to Galaxy Grid. How's everyone doing this morning?
Great.
I'm not getting the energy, you guys. Like, this is Galaxy Grid. All right, it's electrified grid. All right, you're getting zapped here by the news. Let's go. Chug that Celsius faster, Thaddeus, honestly. Let's hop right into it with Uptober. Bitcoin is only up 18.5% year to date. Ether is up 20%. ETH BTC is minus 1.5% on the year. Sol is minus 0.5% on the year. I guess 18 and 20% for Bitcoin and ETH respectively is not too bad, but we went into October with a material rally. Bitcoin hit a new all-time high of 126. It's now trading around 110. Does this feel like a bull market, folks, still, or no?
Yeah, I mean, I think that the macro backdrop has largely remained the same. It was mostly a mechanical fault in the crypto market specifically that kind of fueled this recent downtrend. But the surrounding cast still feels very similar to the way it was at the beginning of the month and leading into October. So in my view, not much has really changed. It was just a tweet and kind of a mechanical fault that was isolated to the crypto market exclusively. So yeah, I mean, I still feel like we're pretty well positioned heading into the end of the year, and the macro backdrop is still conducive to risk assets.
Yeah, it's just a little pull off from the all-time highs as well too. I mean, we had a healthy leverage flush out. I mean, it was the biggest liquidations we've seen in crypto this past week, but relative to total crypto market cap, it wasn't out of control. So I think it's healthy. Options market isn't freaking out, so it looks like we still might be in the kind of plus 100 range into the end of the year. But folks are a little nervous, but I think we'll do well into the end of the year. Got some good stuff coming from the Fed.
I think what's interesting is that one of the major drivers of Bitcoin's price in the past few months has been like the USD weakening, and the same story is still behind it. There is tariff coming. Trump is putting aggressive tariff on China. That's what his tweet triggered the liquidation, but Bitcoin's price really fell like that much, kind of going the contrary way of what we expected to see. So that's an interesting factor that I'm looking for this market to see if Bitcoin is still going to behave like digital gold in this environment.
Yeah, it has been materially lagging gold. Gold itself up 65% year to date. It's one of its best years ever, actually. But I agree. Some of that structural stuff is not changed. The other one that I wrote about last week that I feel has not changed is the AI boom, right? There's been a lot of anxious commentary about whether the CapEx boom, right, the spending on AI build out, is it too big? Is it a bubble that's going to pop? Is some of it circular? And I just can't help but note that there's so much more electricity alone on the energy side needed, and data centers built to receive that energy, that it just doesn't feel close. I know it is huge, And we likened the build out of AI to a new Manhattan project, and I was comparing it to the internet in the 90s, which was really not framed in geopolitical terms the way that AI is now framed. And so it does feel like if a nation reaches that AGI moment, that artificial general intelligence breakthrough, any nation, seems like even if a small nation like Azerbaijan got it, then perhaps they might take over the world as the next global superpower. So there's a lot at stake that didn't, obviously the internet's become unbelievably important, but the build out in the 90s was not framed in these terms. I think it is framed more in these terms. So I expect the build out of AI to continue. So I think that's also been underpinning risk markets so dramatically that it's something that I think all investors in any asset class need to be paying attention to, but I'm decidedly on the bullish side. So it does feel to me like a hiccup. And at 110, Bitcoin's 14% off its all-time high ish. Like that's normal in Bitcoin runs. I know it seems painful, but it's certainly not unheard of.
Yeah, and I mean on the AI front too, it's like outside of the narrative of like this new generation Manhattan project thing, people are very focused on the numerator of the equation and aren't actually looking at what AI disrupts. Like it disrupts medicine, it disrupts the military. The biggest fear is that it disrupts the entire labor market. We're talking tens of trillions of dollars in addressable market disruption, and that just kind of seems to be ignored in a lot of the fear mongering. They're just looking at the top line number of trillions of dollars spent, a lot of it being circular, but they're kind of missing the point that the addressable market and what this ultimately disrupts is many tens of trillions of dollars worth of addressable market. So like when you frame it that way, we're not like crazy into this whole program just yet, in my opinion.
There's still time for the demand too. I mean, I think it was Harvard economist Jason Furman estimated that GDP growth was 0.1% less data center investment for the first half of the year, and the folks that we've been talking to saying that they're still building out and there's not capacity to actually get the stuff going. That's been invested through mid 2026. So there's a lot of good kind of tailwinds keeping the economy going there with just build out nationwide on these data centers.
Yeah, and some of it is circular, and that's been a criticism by some of the capex raises and spend we've been seeing, a company raising money from a chip maker, and then the company taking equity in the chip maker, and then the chip maker giving the chips to the company, right? And so it's sort of like the same money sort of sloshing around, but that's not most of it. There's been an enormous amount of hard cash invested by investment grade top banks, investors, top companies, right? Like companies in the top 10 by market cap globally are spending real cash. So it's not all circular. There have been some of those sort of co-investment, reinvestment scenarios, but there's also been enormous investment of real cash.
I think Anthropic announced that they're targeting $26 billion worth of revenue next year. That is a massive business. These aren't just fake propped up companies. There's real demand for this stuff.
All right, the biggest recovery of Bitcoins in history. The U.S. government seized 127,000 BTC from an Asia-based pig butchering scam outfit, fraud outfit, slave ring. I thought, were they keeping slaves and using them to do it, Thad? It's a really sordid tale, an enormous recovery that some amount of which ostensibly will likely become part of the strategic Bitcoin reserve. But this is a very curious tale as well, Thad. Why don't you explain what happened and then maybe break down some of the nuance here?
Yeah, these coins have a bit of history. So we saw an indictment come out of the DOJ this past week for this Prince Group, which was running this huge criminal conglomerate out of the Southeast Pacific. So they were, using people to do pig butchering, forced labor. It was just a real sordid outfit. So they seized 127,000 Bitcoin from them. But that's where kind of the details get a little interesting. You get into the indictment. The lists of wallets where they seized from are associated with this private key exploit for Lubian.com, which was a huge Bitcoin miner circa 2020. They were 6% of the hash rate. And they suffered like a catastrophic wallet private key exploit. It was called MilkSad. These guys, the distrust security group, identified it. Essentially, this old private key generation from the Mastering Bitcoin book relied on system time. So as they could just roll back computers and they just were running through system time, they essentially generated this whole string of wallets that were compromised through this bad entropy wallet generation. And so these guys had 127,000 Bitcoin drained from them in 2020, and then subsequently just kind of sat there. Everyone just kind of assumed it was an exploit. Lubian had been like sending op returns to these addresses, saying, "Hey, you've taken our Bitcoin, please send it back." Until this seizure, and then we saw essentially in the indictments them saying this Chen guy had the private keys to these wallets. And so the question was like, were they laundering through them just exclusively? Were they, did they exploit them? It became a very kind of interesting sort of affair, and it seems like this gigantic Chinese miner was actually part of this massive criminal organization. So it's pretty interesting. The main guy, Chen Zhen, is still on the run with about 2 billion worth of Bitcoin, and maybe another 2 billion behind it. So he's still out there doing something, but it's a huge seizure. 64% of the U.S. government's Bitcoin in one go.
So what is pig butchering? Can you explain that, Thaddeus?
Pig butchering. I'm sure everyone's gotten these interesting kind of text messages. Just hello, my name is Susan. It's essentially people lead in like a monetary catfishing of sorts. They just kind of try and make friends with you, and then all of a sudden, oh, sorry, I text the wrong number, and then, well, I also do have this interesting thing I've been looking at. It's like this, random meme coin stuff. So they try to build your trust and then take money from you. It's they were raking in $20-30 million a month in the past when they kind of some of the stuff from the indictment, but it's a pretty big problem kind of globally. There's a lot of people lose money to it.
Yes, it's a pretty famous story in China. There's a movie that's made about it, and apparently they kidnap people that cross the border and to Myanmar, and they force them to be scammers. One of my friends actually, he got scammed for like $500,000 with like meeting a girl on a dating app, and the girl started talking about crypto investments and how good it is, and show him this app that's really similar to Coinbase or any kind of trading app, and say this is a return you can get if you put your money there. And the first time he put money in, he was able to withdraw and made like, I don't know, 20% of profit. And then he got greedy and greedier, and then finally he put his money in, and his money was all gone. He couldn't withdraw anymore. So it's like real stories surrounding this crypto scam, and it's built up a really bad reputation for crypto trading in like the Asian kind of community.
Brutal.
Yeah, no, the whole thing feels like the Spider-Man meme to me, where everybody's just pointing at each other and they all look the same. Like the hacker is the miner is the pig butcher, and it's just all this like massive circle of the same people. Like I know that there was speculation that it was the US government who hacked these wallets, these low entropy wallets, like 5 years ago, but I don't know, like did the US really have interest in doing that in 2020 at a time where Bitcoin was still so small and largely under the radar of the government? So like I don't know. When I hear this story, I think of the Spider-Man meme more than anything else.
Yeah, I guess the question, right, is Prince Group, the indictment only identifies Prince Group as the entity that they seized the coins from and that they're indicting. But I guess your point is, if they say that Prince Group had the keys to those funds, did they exploit Lubian, or are they part of Lubian and maybe Lubian was never actually exploited? That's, I think, at the core of that question. And then the other big question, which you write about, by the way, at length in our newsletter, the other big question is, can these coins become part of the strategic Bitcoin reserve? Do we know? I have a theory, but I mean, it's not clear, right?
I'd be curious to hear your theory.
There's legal complexity, right? There's statutes and federal law that dictate how to handle seized funds, right? The president has said, don't sell, and in fact, try to get more. Now, try to get more is doable. Like whether or not they need new law to do that is a question. Try to get more. But there is existing law around do not sell and do not give up. Now, maybe they won't sell them for profit once they're finally forfeit to the government. But that doesn't mean they won't be required to give coins back to victims if they find them. And I think most of us would probably agree, I certainly do, that, gosh, if they do recover some victims' property, they should give it back. So I would just come out and say not all of these coins, certainly not all of them, will end up in the hands of the Strategic Bitcoin Reserve. It does seem like a lot of these pig butchering victims are going to be from Asia or from all over the world or something. So whether or not the government could even identify victims to repay if they wanted to is, I think, also unclear. But there are laws, federal laws, that govern how the U.S. government handles seized funds. All right, and Wall Street is stepping up its crypto offerings with some major announcements from big banks and wirehouses. Jianing, you wrote about this last week in our newsletter. What is the story? What are some of the big announcements first, and then we'll ask you what it means.
Yeah, so the biggest story is that Morgan Stanley has lifted its longstanding restrictions on financial advisors' ability to recommend or allocate crypto investments to their investors. And to give context, in 2021, Morgan Stanley allowed Bitcoin exposure to clients, but only to clients that have more than $2 million in their account and having been holding their account for 6 months. In 2024, when the ETF launched, they lowered the threshold to investors that have more than 1.5 million net worth. But recently, with this announcement, they dropped all restrictions, so you can allocate crypto to any type of account for any kind of investors.
So they can like put it in model portfolios, or just RIAs can just generally sell these ETFs into their clients' portfolios.
Yeah, exactly. So that includes like 401k account, RIA account, individual account, any type of account, literally. And
this is what we've been waiting for when we talked about the size of the investment advisor wealth management cohort, right? This is like, and Morgan Stanley is one of the biggest.
Yeah, so the four big wirehouses that we call includes Morgan Stanley, UBS, Wells Fargo, Merrill Lynch, and they are really a major distribution channel of all crypto like ETFs, and they manage around, let's say, we estimate around like 300,000 advisors and 30 trillion of assets. So with that much exposure, even like a modest of 1% or 2% allocation to Bitcoin can impact like the total AUM of Bitcoin spot ETFs by a lot. Right now, the AUM total for Bitcoin is around like 146 billion. So assuming like 1% allocation around across the $30 trillion threshold, that can grow the total AUM as 3 times. So it is a major impact of like the net inflows of the ETF channel, and that could really sustain the buying power of Bitcoin's price.
Hey, it's a great gold star for Bitcoin too. We're out of the early adopter phase. So it's in the mainstream. It's fantastic. That's what we've been working for.
And there were other announcements too, not just Morgan Stanley, right? I've seen Schwab, Citigroup.
We've seen Citi announcing plans to launch institutional crypto custody service in 2026, and that has been in development for the past 2 to 3 years. JP Morgan hinted at expanding client trading access to providing crypto trading ability on its platform. And it also planned to allow people to take out loans using Bitcoin spot ETF as collaterals. That was like the news a few weeks ago. Vanguard, one of the more anti-crypto firms, is also preparing to list third-party crypto ETFs on its platform, although not launching its own Bitcoin or ETH ETF, is allowing access to crypto exposure.
But they were also like pretty vehemently against just giving people exposure to crypto in general, right? And like they like very confidently doubled down on that verbally and through their actions multiple times. So I think the irony of this is just the iron fist of the market kind of slapped them and told them that they're wrong, and now they're kind of forced to roll over on it, which I think is a great outcome in this situation.
Hey, you can't beat them, join them. All those banks are working on their own crypto initiatives too. It's they're running their own private chains, settling transactions as much as they're real.
Yeah, love
chains,
to see
but
Vanguard rethink its approach to this. And then just on the custody, we predicted at the beginning of the year that you'd see the world's top 4 biggest custody banks custody digital assets. I should have said announce they'll custody. That would have been safer in 2025. That's BNY, State Street, JP Morgan Chase, and Citi. So we know Bank of New York does already crypto custody and Bitcoin custody. I don't. John Ning, you just said that Citigroup has announced that they will custody in 26. Have we heard anything from State Street and JPM on custody? Not that I know of.
State Street announced that they will launch custody in 2026 as well. But JP Morgan said is just considering crypto trading for now, crypto custody not in the near future, but they did not deny the possibility of having that service set up.
Jamie Dimon is notoriously flip-floppy on crypto. He hates it. He loves it.
Yeah. I'm going to go ahead and count this as a pretty good win. I'm going to say announcing that you will that counts in my prediction. BNY, State Street, Citi all get a check mark in mine. JPM still the laggard, but no surprise there because Jamie has been, a big anti-crypto guy. In fact, he's on the intro to the Galaxy Brains podcast saying that Satoshi is going to come back and steal all the Bitcoin. So he's been aggressively wrong in many times historically. All right, last story. Let's get into it. Futarchy. It's so hot right now. MetaDAO, big Futarchy platform on Solana, correct, has been having a big, few months. Zach, remind us again briefly what Futarchy is. I think we talked about this on the first episode of Galaxy Grid. Remind us briefly what it is, and then talk to us about MetaDAO and what's been going on.
Yeah, I mean, Futarchy is just governance by markets. Instead of one token equals one vote to decide the outcome of governance proposals, it's let's just use asset prices or the DAO token as the objective function of the voting mechanism. So if something is positive for the DAO, the pass price will be higher than the fail price and vice versa if it's sort of detrimental. But the big unlock recently with MetaDAO is they're rolling out of a new legal structure that essentially binds on-chain governance outcomes to actual actions that need to be taken by the team's membership core. So whatever happens through the governance mechanism must actually manifest in reality to the extent that it's not illegal and can actually be carried out. And I think that's the big driver here why these ICOs have been so successful. Umbro was 207 times oversubscribed, raised something like 155 million. And then Avicii Money over the weekend raised 35 million with a target raise of 2 million. So another 10x, 15x oversubscribed. But I think the rationale for this is just the confidence in the mechanism. If me as a token holder can invest in one of these things, and I know that I'm actually protected on the back end, control all the decisions that are being made with the money I contribute, and having the ability to claw it back and dissolve the company, right? Because if every single decision must manifest in reality, we can all vote to say we're shutting this company down and we want our money off the balance sheet back. So I think the early success here is coming from one, the ICO meta, internet capital markets, whatever buzzword you want to tack onto it, just kind of being in vogue. And then you throw into the mix the guarantees and the benefits of the MetaDAO model on top, and you just kind of get a snowball of confidence that pushes people to kind of ape into these things.
That's good. I think it's interesting too because in so much of our trustless infrastructure does have a trust element in voting for something in governance, then trusting the devs to actually follow through and implement it, and kind of removing that layer is a good step to kind of solidify. I think it was it Wonderland Time that kept on having all the votes, and the devs were like, maybe we'll do something a little different with the tokens rather than what the governance vote wanted. So it's awesome. I like it. It's a good progression of trustlessness.
Yeah, I mean the same thing even happens with massive DAOs, like the feud between Aave and World Liberty earlier this year, where it was we voted on this, but now it's a massive question mark if this is going to even happen. This new MetaDAO model kind of doesn't necessarily eliminate it, but greatly mitigates the possibility of something like that happening. And all of the funds are controlled on chain and by smart contracts. So the outcomes of all of these decisions are kind of automated and code enforced. So there's no oh, we need to wait for the team to go do XYZ off chain in every single case. Like a good amount of it can just be automated and conditional through smart contracts programmatically.
This is kind of similar to like Polymarket and Cashy, where people kind of bet on the outcome, and the outcome becomes automatically governed by smart contracts and spoken out. So it's pretty cool. And given the success of those prediction markets, I feel like this is the way of decentralization trust being realized.
Yeah, definitely. I mean, the decentralized factor of this whole thing is huge. Like you detach essentially the size of your bags from your influence over the direction of the DAO, and that's purely due to the market driven facet of this entire thing. Anybody can contribute. My manipulation is your arbitrage opportunity. So you greatly mitigate the possibility of somebody manipulating this thing and detach essentially someone's wealth from their influence over the organization. It's a huge unlock, really.
All right, that's it for the big topics. Before we wrap, what is everyone watching for this week? Let me hear it.
I'm still watching Bitcoin Op Return to see if there's any follow-up on the Solomon Bros saga that we covered a couple weeks ago. The first deadline has passed. I suspect we'll have to wait until the second deadline on November 5th before we see anything on chain, but just monitoring the situation.
I've been having some fun looking at the pendulum markets and USDAI. I saw a stable coin that depegged to the upside this past month because of so much demand for farming the points. It's interesting hybrid going out further in the risk curve, doing AI data center loans backing the stablecoin. Interesting one.
I'm looking at the UK market's retail demand for crypto products. So 21 Shares and BlackRock just launched their crypto ETFs on the London stock market, opening up the access of those funds to retail investors. So I want to see how much flow is coming in for that channel and like how much appetite the UK market has compared to the US.
And I'm starting to watch earnings season here. We're getting early in the equity earnings season, but we're going to start to see some report. You got Netflix on Tuesday, SAP, IBM, Tesla all on Wednesday, CME, some banks, Barclays. Then Thursday, T-Mobile, Intel, Ford, Blackstone, some interesting. So it's Pete. Interested to see how manufacturing's doing with these, tariffs and stuff. Will be interesting because you got Ford, you got Tesla, you got GE, you got some big producers, Lockheed Martin. Very interested to see how those go this week, and and that obviously that's just general risk sentiment stuff. It's going to be interesting to see how they did in Q3. So that's going to maybe drive markets a little bit as well. Thank you to Thad, Zach, Jianing for being on Galaxy Grid, and everyone, we will see you next week.